Hey guys, welcome back to my channel. Today I wanted to show you what I trade and how I trade. So if you're a total beginner, don't be confused by the concepts that I use, and they will be a little bit overwhelming if you're a total beginner, but I just simply wanted to show you how I trade and what I trade. So in the day, I always trade EURUSD on the London opening. Sometimes in the evening, I will trade NASDAQ on the New York opening if there is a good setup, and that goes for EURUSD on the London opening. I only ever trade if there's a good setup. If there isn't a good setup, I simply just leave the laptop and do other things that I love to do in my day. Let's jump straight in. Hey guys, as you can see, I use TradingView. For me, this is the most stable, and I just really enjoy this platform and the way that it works. It allows you to trade most assets. And as you can see, I'm on EURUSD, and the first thing I do when I come in is I simply go onto the daily time frame, which is up here. This shows me that each candle here is a day. The last one is today, and I'm not going to go into so much detail for beginners. I'm just going to run through my trade and how I trade EURUSD on the London opening. So what I do is I look out for imbalances first. I look for fair value gaps, and I look for market structure. So I use a combination of ICT concepts, and I use market structure as well. So I use both of these in simple terms. I don't overcomplicate anything. I will simply just come into the market and I look at the daily time frame and I look at any clear imbalances. Now, on the weekly, there was a huge imbalance here, which I marked out a while ago. Now, it's very unlikely for the market to retrace back into that today, so we don't need to worry about this imbalance. The market runs on algorithm, so eventually all the imbalances need to be refilled. I find the market structure and following imbalances for me is the best way to trade EURUSD on the London opening. So I look for imbalances on the daily time frame, and so far this one has already been filled by this wick here, more than 50%, and it's already been filled on the other end by here. So what I do now is I can't see any other fair value gaps that are local to where the market is positioned today. So I will use the 4 hour and I'll look at the fair value gaps on this time frame as well. Now there is one here and it's been filled by 50% by this wick here. So I ignore that. I quickly take a good glance over any other fair value gaps that I can see, and I cannot. Now the market is on an upward trajectory in a bullish momentum, meaning it's going up. And in terms of market structure, we're in an upward trajectory, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. We broke structure here. However, we look like we're on a rise to possibly break this previous higher high. This may just become a support for this point here. Now, this line here is an indicator that I use called the 200 EMA. It's basically the exponential average of the last 200 candles that you can see in the market. I don't want you to be overwhelmed by this if this is new to you. I only use two indicators. I use one called the PVSRA, which is where you can see the brightly colored candles and why my candles are all different colors. This is just simply a very good volume indicator, which I absolutely love to use, and it saves me having loads of volume candles all the way down the bottom. And this is one of my secrets that I'm giving away to you. I use the PVSRA and I absolutely love this indicator. Okay, so there's 4 minutes until the London opening, 3 minutes now. So I'm going to run quickly through what I do. I will drop down to the 1 hour and see if there's any obvious imbalances that haven't been filled. This one has still been filled. And by the way, the imbalances on the higher time frame are a lot more respected. So the market is more likely to retrace through the algorithm to imbalances on the higher time frame. So the weekly, the daily, the 4 hour, the 1 hour. They still get filled at times on the lower time frames. However, the higher the time frame fair value gap or imbalance, the more likely the market will retrace to it. Now, sometimes the market will retrace to the smaller fair value gaps and it will look like the higher time frame fair value gaps have been filled, but they haven't yet, which means at some point the market will retrace. A little bit confusing, and I don't want to confuse you in too much detail. So I'm just going to quickly run through what I do. I mark off the times that the London opens, which is for New York, it's 3 a.m. So here in Asia, in Bangkok time, it's actually 2 p.m. and I mark out 3 hours prior to the London opening. So if you're in London, it will be at 5 a.m. For me here, it's 11 a.m. All I do is I simply go down to the lower time frame still, and I look through all time frames. A lot of traders will just use 2 or 3 time frames. I use lots. I use all of these. So I use the weekly, the daily, the 4 hour, the 1 hour, the 30 minutes, the 15, the 5, and the 1. However, I don't often use the 1 minute, as for me it's a little bit too noisy. And what I do is I will place my entry on the 5 minute for a precise entry, but then I will hang out on the higher time frames to get a much higher perspective on the way that the market is moving. So now I'm simply just going to mark out with this box lowest point of the 3 hours prior to the London opening and the highest point of the London opening, wicks included. I will just use a horizontal ray to amplify and define it more. And what I'm waiting for is a break of structure from the previous Asia high for the London opening to break either the high or the Asia low. Now I will do this trade on the 5 minute time frame in terms of entry. I only wait for the candle closure outside the Asia high or the low from the previous 3 hours from the London opening. I wait for a candle closure on the 5 minute time frame, and only on the 5 minute time frame. I don't wait for it on the 1 hour. I don't wait for it on the 15 minute. I wait for it only on the 5 minute time frame. However, then once I've placed my trade, I will expand out and I'll hang out on maybe the 30 minute or the 1 hour. Now at the moment, we're following a really beautiful direction, and on the daily, we're in a bullish momentum. So I will simply just draw out an arrow just to give me an idea of where we're heading. This box you can see here is a support that I drew out earlier, and a support just meaning that this is where the market is bouncing off and has created more than 2 points where the market has hit this area, this support zone. So what might happen is the market may continue up. Sometimes what will happen after the London opening, the market will manipulate and it will come out and it will do a little fake breakout and it will reverse. So what's really important to remember is to make sure that you don't just enter as soon as the market has broken the Asia structure and wait to see the direction that the market is going to go in. I always want about 2 or 3 minimum confluences. What do I mean by confluences? I want to make sure that I've got at least 2 or 3 very clear confirmations that the market is in a very strong position to place a trade. So I'm not going to place a trade unless there's 2 or 3 very strong confluences or confirmations on my side in terms of my analysis. So at the moment, where are my confluences? Where are my confirmations? We are above the 200 EMA, which shows me we are in a very strong bullish momentum on the 5 minute time frame. On the daily time frame, we're also in a bullish trajectory. We're making new higher highs and higher lows on the higher time frame, and I am just going to simply quickly mark out this imbalance here. I think it will be on the 1 hour very clearly, as the market may retrace to this 1 hour fair value gap at some point. It may manipulate back into that. I'm simply just going to mark out my 50% of this range using the fib tool, and the 50% is there. It's about that. Okay, now I'm still waiting and we're in a really good strong position. Mondays, it's a Monday today. Mondays and Fridays tend to be a little bit temperamental and volatile on Forex market because the market's basically readjusting itself after the weekend. So the best trading days for Forex tends to be Tuesday, Wednesday, and Thursday. However, today I wanted to just show you the trade that I do. And like I say, it may play out and it may not. And in terms of setting the trade, what I normally do, it's 2:05. I'm just going to wait a little bit and see the direction and wait for the candle closure above the Asia high or the Asia low. However, we're in the upward trajectory. So I'm waiting for a candle closure above the previous Asia high, and I'm just going to mark out that high with a little circle just to give you a clear idea of what we're waiting for to be broken before we even think about placing the trade. What may happen is the market may manipulate up and it may drop back down into this 1 hour fair value gap, or it will continue up. And at the moment it's looking pretty strong, but we've still got 3 minutes and 54 seconds left on this candle. So I'm not going to do anything until I see a couple of candles that are closing above the Asia range and just going to play it by ear, and we're just going to see what happens. This is when we have to be patient and wait for the market to give us a high probability setup before we even think about placing a trade. Because let's say you just come into the market and you're a brand new trader and you think, oh yeah, it's just going to go up, and you set a trade here. And then what's the algorithm knows that there's traders that are brand new and haven't got a clue what they're doing. And the algorithm is extremely smart, and it will manipulate you, and it will just reverse. And this is where people come in and say, trading is a scam, trading is a load of BS, because they are simply not learning the analysis and learning how the market and the algorithm actually moves. Whilst we're waiting, and it's just simply retracing into this 5-minute fair value gap at the moment, whilst we're waiting for this to play out and for the candle closure above the 5 minutes to take place, I just wanted to quickly tell you about the Asia range, the London range, and the New York range. Now, Asia on every asset tends to accumulate, and it will just consolidate. It will accumulate and it will set a high and a low, but it will just be gathering, if you like, buyers and sellers in the market. London then comes in and it will manipulate Asia's either high or low. So it will take out either Asia's high or Asia's low. New York will come in later in the day and it will distribute. So what it does is it tends to reverse the London price action. I don't tend to trade Asia. I never trade the Asia range. I used to, but it's just not got enough volume in the Asia range for my liking. I like the London and the New York. The New York has the most, and the crossover of the London and the New York has the most volume and is a great time to trade, especially things like NASDAQ and S&P futures, things like this. It's a really good, strong time for traders, the London-New York crossover. Now, we are still waiting for the candle closure above the Asia range, and this is where people will say trading is so boring, trading is so dull. But yes, because in order to get the highest probability setup where you've done your analysis and you have a very strong idea of where the market is going to go to, only then can you place what is a high probability trade that is going to go in the direction of your analysis. And if you place trades before that, or before the candle closure is above the Asia range, then you will sting yourself. With your trading, you need to have a plan. And you need to have rules. You need to stick to the plan. You need to stick to the rules. Because if you're not sticking to your plan, you're not sticking to your rules, this is where traders fail. And every time you set a trade, you really need to make sure that you journal every single trade, especially if you're a beginner. I spoke about this on previous videos. If you're a beginner, you need to journal every single trade, because what this does is it shows you where you're going wrong, and it also shows you where you're going right. And what will happen is over time you will start to see a beautiful pattern of where you're going right, what to do next and what not to do. Also, I always say, if you're a beginner trader, stick to one time frame, so Asia, London or New York, one asset, learn the asset, get very familiar with the asset. I choose EURUSD because it's the biggest Forex pair, and for me it moves in the most kind of steady way, unless of course there is a news event or geopolitical events that are making the market extremely volatile. Now, I like EURUSD in general when there's none of that going on and it's just a nice steady movement. Now it's looking a little better. This is where patience comes in. We're going to wait for this candle to hopefully close above, but let's see. Maybe it doesn't. And again, normally I wait for a good kind of 15-20 minutes after the London opening to see the position of the market, because in terms of movement, sometimes, like I said, it's a manipulation and it might reverse. So it's always good to wait a little bit to see a strong direction. What I normally do is I place a trade on my paper trade account, and I also place the same trade on my funded account. And the company I use is FTMO, and there's a link in the description that you can also join FTMO if you're wanting to not risk your full capital in the trading world. However, I always suggest, if you're a complete beginner, start with paper trading, at least for 2, 3, even to 6 months. I still use paper trading now, and I've been doing this for over a year and a half constantly. I would absolutely recommend using paper trading and not going and using your own account, and not using even a funded account until you know what you're doing and your strategy is refined. Once you have your strategy, like I'm showing you here, make sure you're back testing your strategy, make sure you're going over previous market movements from even up to the last year every single day. making sure that your strategy that you're wanting to use is a viable and reliable strategy that is playing out once you've done your analysis, making sure that the market is moving in the right direction to your analysis, and you can formulate a very clear picture as to whether this strategy is going to be successful for you. The strategies don't always play out. This goes for every single strategy in the world, and this is just the way this game works. If you have a strategy that is more often than not winning over 50% and you are seeing results with this, stick with it. Just keep refining it. That's my advice. I've got 55 seconds left on this candle, and it looks like the candle may close above the Asia range and on the 5-minute time frame. What I will do is wait for another candle after this one just to give me a clear indication of where the market may be going. And I will also just quickly look at GBPUSD as well, because this is a correlative pair to EURUSD, and I like to see which way the market is moving in GBPUSD because it gives me an indication of where EURUSD is also heading. Now we're in a very strong bullish position in GBPUSD, so I'm going to just go back to EURUSD, and what might happen is it may retrace to this 1 hour fair value gap, or it may just continue. So this is where we decide to take a long position, which I'm going to just set the tool here. I'm going to set my stop loss to the halfway of the Asia range, and I never trade anything less 1.5 risk to reward ratio, this number here. And by the way, this is just the way I trade. I'm not telling you what to do. I'm just showing you what I do. I'm not here to teach you. I'm just here to show you. And should you choose to also do what I do in the same way, I will quickly go to the 1 minute to see which direction, if we've got a market structure shift, which we don't at the moment. The market rate may retrace to these fair value gaps here, this imbalance. Fair value gaps, imbalance, same. And I'm also just going to go to the higher time frame and see where the previous high was here. And this may, let's go further back, always go back. The market may bounce off this area of interest. So I'm just going to mark this out. There's more than 2 touch points. The market may bounce to this area of interest where the market has bounced off 3 times in the previous weeks. So it's always really important to zoom out to the higher time frames before you do anything to make sure you know what may happen. Now, it may bounce off this and reverse. So again, I'm just going to wait. I'm not going to enter. I'm just going to wait. So like I said, I placed my paper trade on the trading view using this tool. And I also placed the same trade on my FTMO, which is on my phone. And on the app, I simply just place exactly the same trade as I do with the same stop loss on my MT4 app, which looks like this. Now I'm trading very conservatively. I don't trade very high lot sizes, so I don't risk that much with my funded account. For me, it's a slow and steady wins the race game. I don't put on huge lot sizes and I don't risk loads just to get to flip an account. I prefer to make a steady 3% a week increase, and over time this compounds and builds up. Now I'm just waiting for this area of interest to be hit and see if it potentially reverses off it, which will then mean that it's a manipulation. However, if it pushes past through this area of interest, then I will take a long. However, if it bounces off this area of interest, I will take a short to this point here. If you have no passion in trading, then you will be extremely bored, especially with day trading. I don't place a trade every single day. I only place a trade when there's a high probability setup. Today, I would say there's a pretty high probability setup. However, it is a Monday and it's quite speculative on a Monday in general, and I don't often trade Mondays, and I will trade Tuesday, Wednesdays and Thursdays, and once the trade is done, I close the laptop. I don't sleep with the trade open. For me, I would be checking it all night, even if I do set a stop loss. Even if I trust my original decision, I'm just still not trusting the market. I might trust my original decision, but the market can do anything at any point. There are no certainties in this game. Okay guys, so I did enter a long position on the 5-minute time frame. It may, like I say, break out of this range and it will continue and it will be a very strong movement. However, what may happen is it will start to reverse and bounce off this area of resistance. It may manipulate out of this area of resistance and then return back to the fair value gap as a short. Now, I'm just going to wait and see how this plays out. I have set the trade. I've put the stop loss to the 50% of the 1 hour fair value gap, and I'm simply just going to wait, and I will, once this is moving in a strong position on my paper trade, I will enter the same trade on my FTMO account. For the sake of this trade, I'm probably going to pull out early because it may not reach to this point here, and I just simply wanted to show you how I trade. So I have set the trade on my FTMO account, and so far we are in the green, rather the blue. We're on the green on the paper trade. I feel that it will either manipulate out and reverse off this area, or it will continue to rise. Only time will tell. And if it manipulates out of this range here and candle closes above, which we've got 3 minutes left on the candle here. Right now we're in a good position, but I will just return to the 1 minute just to see which direction 1 minute is heading in. And we've got some strong volume candles on the 1 minute. On the PVSRA indicator, we have strong volume candles. Doesn't really necessarily mean much because on the 1 minute we could just be doing what's called a liquidity grab, which is grabbing money above previous highs or previous lows. Liquidity simply means pools of money, so we may just be liquidity grabbing above this area of resistance and then dropping down, or we may be retracing this fair value gap here and then bouncing off and then continuing to rise up. Only time will tell. Okay guys, we have 6 seconds left on this candle on the 5 minute, and it looks like it might do a liquidity grab now. We've got a strong volume candle on the PVSRA, which tends to indicate that we may just be making a strong liquidity grab, or it will continue in this direction that we are wanting. I'm actually probably going to exit out of this trade because I feel like this is a liquidity grab and I feel like it's actually a manipulation, and I'm just going to keep an eye on the other time frames. We are still in strong movement on the other time frames, on the 15 minute, on the 30. However, we have pushed past the area of resistance that we did mark out. 9 minutes left on the 1 hour. Very strong position on my FTMO account. I'm just going to wait a little bit longer. I may start to exit out of this trade, or I might just continue in it. And the reason for me being a bit indecisive is purely because I feel there's a lot of imbalances on the higher time frames, which it will need to retrace to at some point. However, the market does look in a very strong bullish direction at the moment, so I'm just going to keep it in, and I might start to X out soon. This is a beautiful trade so far, and it's going very well on my FTMO account. Hopefully this will give you a good idea of what I do on the London opening on EURUSD. I do like to wait a little bit longer after the opening, which is 2 p.m. here and 8 a.m. in London, and I don't just enter straight away. Like I said, sometimes it manipulates and then it will reverse, and I don't want to be caught out on this, and this is why it's so good to wait a little bit longer. It's actually 2:50 here now, so it's actually 10 to 9 for you guys in London, and it's 10 to 3 here. At this point, what I will do is I'll go to the 1 minute and I start to see what's happening on the 1 minute, and I keep an eye on it. So it's kind of fast day trading when it comes to this point. I will keep an eye on the trade at this point for the sake of this video. I'm in a very good strong position on my FTMO account. I'm happy with this. I have a very conservative lot size. I'm just going to tune out of this trade for the sake of this video not being too long. I'm going to sign out of my FTMO account because I'm happy with what I have got with today's trade on my FTMO account. With regards to my paper trade, this is just a guide that I use to enter my FTMO. Sometimes what I will do is, as I've taken out my trade on FTMO account, which I have just done, what I will do if the market then starts going again is in a very strong position to the original idea, which is in a bullish idea, what I will do is I will set another position on my FTMO. However, I will never put more than one position at a time. It looks like it's going to start potentially reversing. I'm just going to go down to the 5 minute. This is a huge wick rejection to the upside. I have not gone to anywhere near my take profit for today because I do believe that this is now a manipulation, and I do think it's going to start reversing. If on this 1 hour candle we are closing a very strong above this area of resistance, what I will do is I will take another position on my FTMO account. So that'll be 2 positions for today. Remember, I just use my paper trading as a very strong guide as to what I do on my FTMO account and my real account, which I sometimes trade as well. However, at the moment, I'm just using my FTMO account. And the good thing about using funded accounts is that you can buy challenges and they are fairly reasonable in price depending on what account size that you buy. You're not risking your own capital. So if you are, because you're buying the challenge, but you're not risking, say, your life savings in your real account. So this is why funded is so good. However, you do need to pass challenges in order to become funded, and you need to prove to the company that you have skills. Because if you don't have skills and you are proving that you are failing and you keep losing, then you simply won't ever get a payout. In future videos, what I will do is show you in more detail, if you're a complete beginner, what I do and how I did it, and go into more details about how you can also start yourself. Usually on a Monday and Friday, like I say, I don't usually trade. Tuesday, Wednesday, Thursdays trade are much better. I may repeat the same trade again and do it again live. But for now, I just wanted to show you what I do, and maybe it sparked some interest into how the market moves and how beautiful the London opening on EURUSD can be once you've done your analysis and once you get your head around the market. It takes time, it takes practice, it takes consistency, it takes determination, it takes passion, it takes energy, and it takes patience. And without these things, maybe this world just isn't the one for you. I really trust that you enjoyed this video. All the links to my platforms that I use are in the description below, and also to my free ebook, which is for very beginners conscious guide to trading. If you have any other questions or want to comment on anything that I've shared in this video and you are keen to get started, I also offer a mentorship program, which is also in the link in the description below. For now, I'm just going to check out because I've been on the screen for hours, and I'm sending you big love as always.